How you guys doing today? Well, we're almost through another week. Don't know about you, but this one has been eventful thus far. But hey, we're here, we're live, and I will not complain. Got a couple of things I want to go over with you this morning, and then we're gonna let you guys get out of here and get to your day. Uh, Inflation, man, putting up a fight. It's putting up a fight, and so for those of you that are waiting on the sideline, playing at double dutch. If you don't know what that is, Google it. Double dutch. It's a jump rope type game. But there's two lines, and you might be waiting to jump in. You really need to evaluate where you are because there's a lot of other things moving. Prices really are not going to go down to where most folks think they are, and uh, you're going to have to decide what it is that you're going to have to do. Put a real plan of action together because several places in the country are really starting to price a lot of people out. And, you know, it's a real thing. So let's get into the economic report for today. The real one that only moved the needle, right? Or the stuff that I'm watching. The producer price index, core PPI, and PPI year over year, right? Bottom line, producer price index. Look at it like this. If I'm producing a widget that ultimately is on a supply or a conveyor belt to assemble to ultimately sell to you, if my prices are higher initially to produce said widget, at some point in time, those costs are going to be passed on to you, the inflation. So these are some tools that, the powers that be look at with all these numbers, right? To give a good gauge as to where inflation is. So came in a little higher. Again, you can go to the U.S. Bureau of Labor Statistics and read the report for yourself. Start getting an understanding. It's summarized. It's not like it's, you know, 5,000 words. And you'll start seeing the data that they look at, the parts of the economy that they track to come up with these numbers. And then over a year's time, you'll be more and more comfortable with these things. Because again, the goal here is for you guys to not just understand for a one-time transaction. That's what keeps folks in certain economic lanes. Okay. You get excited or you learn a little bit about something because you're buying a home or whatnot. Just think of that as the foundation. And you have to constantly add to that knowledge so you can have a good understanding, and it'll help you and your family as you move forward. But anyway, that's what I want to get into with the producer price index. Again, if I'm selling widgets, my cost initially for all of the supplies and things that I need to create that widget and pass it on to you, if they go up, that's a good canary in the coal mine as to seeing where inflation might go, because inflation is just the eroding of your purchasing power. Okay. Same dollar doesn't buy as much as it used to, right? So as a result, we're looking at the 10-year. We watch the 10-year over here because we know this is another good tool, canary in the coal mine, to let us know what interest rates are doing. An idea. It's not lockstep, but it's another tool that we look at, right? Anything under 4% is where you want to be. If you are in the process, you've been blessed to be able to purchase a home, and you're going to be closing here within the next 30 days, lock in, my friend. Lock in. Okay. Remember, if you're doing a government insured loan, FHA, VA, USDA, you have to be in that loan for a certain period of days and payments before you can look to do the streamline refinances that are associated with those three loan types. If you're conventional, You don't have to be, but doesn't make sense to refinance with conventional in a lot of cases, uh, unless the interest rates are there, because all of them have tangible or net tangible benefits that you have to realize as a client. So there's no more churning that people used to do back in the day to take advantage of you. So the sooner you get on the property ladder, if the numbers work for you, the faster that time elapses. And just as an aside, say if you close in September of last year, let's say August of last year, then this month you should have been making the number of payments that you need to make the 6 payments and getting close to the 210, 212 days that you need to have. So August of last year, and then just as early as yesterday made sense. Especially if you bought in the 7% range, you almost could get a point off, pay a little bit in discount points and get down into the five. So affordability is a big thing. Insurance is up. Admonish you guys to shop for insurance. Is not fun, but that's what you have to do to save money. So anyway, 10-year treasury note is up this morning. Now, yesterday, here's another indication that, inflation is putting on a good fight. It's sticky. Um, the 30-year bond auction that took place yesterday, okay, wasn't a great response. Well, what does that mean? It validates all the other things that we're seeing about inflation, because long and short of it is this: if I'm going to give the U.S. government the best type of debt on the planet, my money, and lock it up for 30 years, okay, that takes a lot of opportunity costs out of my pocket. And if that 30 years not yielding what it used to, or higher than a shorter duration debt instrument or money market or stocks, things of that nature, well, then the demand is not as high as it once was. Inflation, sticky. Okay. So all of these things help you decide, hey, let me get off the sideline because I've waited 4 years and it's not going like the YouTubers told me it would go. Okay. I got to really look at my numbers and, get with whoever I know, like, and trust, apply, right? You may need to get a loan scenario if that's what you need to do. Or if you're already in process, get that second opinion, because a lot of you guys are paying a lot of extra money that you don't need to pay because you don't know how to shop, or you don't know that you can. You see what I'm saying? So all of these scenarios applying, second opinion, right? Loan scenarios, and then, like I said, applying, help you put inflation into perspective, because it's sticky. And by it being sticky, the Federal Reserve, Jerome Powell, and the crew, is not going to start lowering that Fed funds rate until they get ready to. So again, understanding that, understanding most of you guys are going to do some type of government insured financing. Even on the conventional side, there's a strategy to everything. So you gotta understand what's going on, and not just rely on your biases. Okay. And then last but not least, just to confirm what I'm saying, this is a live snapshot. These are averages as far as rates are concerned. Okay. But as you can see, it's not 7-8%. If you're a jumbo, right, $766,251 or more, rates could be higher. If you're a real jumbo client, meaning you have that kind of jumbo money in your bank account, you need to go to one of the big banks. Just keep it a buck with you, okay? Because they want your deposits, and so they're gonna show you some love. But it's probably gonna be in the form of an adjustable rate mortgage. But if you're sophisticated and savvy and you know what's going on, cool. If not, you can shop around to a regional bank. Be careful, or somebody like us, a mortgage bank that has the ability to broker, so on and so forth. But point I want to make is the rates. Quit listening to everything that you hear, and then even with this, as you get an idea right, of the averages, you still have to know and understand what your numbers look like. So again, on the screen, right beneath me, you want to apply if you're serious about buying. Uh, if you need a scenario, okay, there's the QR code for that. And then lastly, if you are already in process and you're outside of 30 days of closing, okay, because if you're down to the limit 30 days and everything's clear to close, things of that nature, you need to lock in and close. Don't play yourself, okay? But if you're outside of that, get a second opinion. Hit the QR code, upload your loan estimate or your fee sheet, and let's see if you have the best deal that you possibly can get. Short and sweet, man. Short and sweet. Got a lot of clients to touch. Here's what I wanted to wrap up with. There's a lot of marketing out here talking about 0% down, zero closing costs, or 100% with no closing costs. Let me help you out a little bit. Here's the deal. Nothing's free. Okay. Typically, when someone says 0% down, if you're not a qualified veteran or spouse that has access to the VA loan product via a certificate of eligibility, or if you're not buying a home that is in a USDA eligible area and you meet those income requirements, the only way, the only way for you to get 100% financing is with a first and a second, a combined loan to value, which is fine. I just want you to understand that second is going to come in two flavors. It's going to come in a form of a repayable or uh, one that's a forgivable second. And if it's a forgivable second, they're going to have terms associated with the forgivable second. 3 years, 5 years, depending on what state. Some of these states, like you're going to jail 10 years. Okay. So understand when you go into these things that you understand what the terms are on the second. The rate's going to be higher on the second unless it's a repayable second. Okay. You might see a lower rate for a second that is not going to be forgiven after a certain period of time. They all have their place. Okay, they all have their place. I just want you to understand because when it's time to refinance and these rates start coming down, a lot of you guys are going to be upset, and I'm gonna see a lot of stuff on the internet talking about how you were hoodwinked and bamboozled. Okay, I'm telling you now. Make sure you know what type of second you're getting and the penalties for paying it off early if they are penalties associated with it. Okay, don't be naive. Closing cost, same thing. A lot of down payment assistance programs out here will help with down payment and or closing costs. Okay, so just like some of the ones that I mentioned, there's a silent second that comes with a form of, in some cases, an additional grant that might help with closing costs. Okay. But understand, understand. Lastly, if you're getting 100% financing, if it's anything other than VA or USDA, any other combination, the rate's going to be a lot higher. It is what it is. More risk. You have no skin in the game. The less investment you have in the game, the less skin you have in the game, the more the lender is going to charge for your lack of that skin. Because if it gets tight, you might just walk away. But if you got something invested, that's how it works. That's the truth. Uh, that's the only way I know how to tell you is by telling you the truth. I know folks do a great job with, the 3 card Monty and get you looking at pretty people in pretty locations. I want you to be a successful homeowner so you can build a great foundation and focus on the 3 E's: the employment, the education for your children, and some entertainment so you can have fun while you're doing your thing in your house. That's it. You guys have a great day. Be productive. If we could be of assistance, reach out. But if not, Until the next time, peace. Y'all be blessed. Do 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 do. There was a live broadcast in progress.